What's up, guys? It's Brendan from Market Makers, your home for Wyckoff and Advanced Fibonacci TA. I really had a lot of fun making that collaboration video with Craig, Crypto Savvy. If you guys didn't get a chance to watch it, it was done Saturday. It's there in my playlist. Feel free to watch it and comment, and I will respond. All right, everybody. What we need to talk about is Bitcoin. We need to talk about the other marketplaces. They're all in a crucial place that's going to determine the next leg. Is the next leg down or is the next leg up? Be very wary if you watch TA from people that only trade crypto, they have blinders on. It's the same big money in all of these marketplaces. You need to understand that when you're looking at crypto, it tracks super closely to the Russell and the NASDAQ, and you'll see it in the charts when I show it to you. But let's back up first, guys. Nothing fundamentally has changed yet with the current liquidity in the marketplace. I say that because, yes, the Fed raised interest rates a quarter point, which does nothing. It's a joke. But they did say they will stop mortgage-backed security purchasing. However, 10 days ago, they did the last $50 billion purchase of mortgage-backed securities. Something to understand is since the virus crisis, can't say the name, since the virus crisis, 40% of the money currently in circulation was printed. So you had this parabolic rise. Now you see this in crypto. You don't see this ordinarily in the other marketplaces. This is the 144 in teal, the 233 in red. Look at that separation from the EMAs, okay? Now the S&P typically returns 10% a year in a bull market. We are coming off the longest bull market in stock market history at 11 years. The S&P returned 120% in just under 2 years. 120%. It's 6x its normal 2-year return. So you saw that parabolic rise in the SPX, you saw it in the NASDAQ, you saw it in the Russell, and you see it in crypto. So it's very important to understand because now mainstream news, you're starting to see some bearish sentiment. The main thing that has changed in the marketplace is sentiment. This is greed. This is fear, okay? And right now there's a lot more fear entering the marketplace. Some people think, well, that's why we're going to pump because there's a lot of fear. Other people think, well, finally, the mainstream media is starting to realize, hey, this is a very dangerous place in the market, and these markets are heavily overvalued, talking about the equity market. And so when those come down, if they come down, or when they come down, I should say, keep in mind, guys, a lot of the people watching these videos, I know you're younger, I'm older, I'm 43. I traded the dot-com crash. I traded the '08 crash. I was working at an investment bank that went under in the '08 crash. The S&P fell 50% in both. The NASDAQ went down 82% in the dot-com crash. So every level you think will hold for Bitcoin will be violated when those marketplaces crash, okay? Now, the bleed out could take a long time. The dot-com took 2.5 years for the NASDAQ to decline 82%. So there's going to be pumps, and they're going to be vicious pumps. Charles Dow wrote about this, okay? The 3 phases in a bear market. You have your initial decline, then you have your reaction, okay? You have your reaction, and then the bear comes back out and mauls you again. So we want to be aware of that when we're looking at our charts. So let's look at this. I'm going to go ahead and throw this in Wyckoff for you real quick. Just go over the key steps since accumulation, because Bitcoin is about to repeat or attempt to repeat a very key step, and it's right here after this May sell-off, right? We had our May dump, we had our previous all-time high, roughly 64K or whatever, and we have our selling climax candle here denoted by this long demand wick, okay? I'm just going to box this in. If you guys have been watching my channel regularly, you know I do a lot of Wyckoff on my channel, but no time to write every single step if I'm going to do this on the macro level. I'll box this in for you. There's your base, your selling climax candle, your automatic reaction. Remember, Wyckoff is an action-reaction principle. I call it the rubber band method. You stretch it out here, strong demand, bounces you back up to your ceiling. Now, a couple of things to note here. You have your chop coming in, okay? Now, where did price get to? Just above the 233. You see this? Just above the 233. You make an up thrust outside your trading range. You're unable to hold the 233, and you fall down 12,000 points. Bitcoin is about to test this 233. But Bitcoin's trying to test this 233 to do this over here, okay? This is your LPS. So what you have here is you descend from your up thrust. You're not able to hold a higher low. You descend from your up thrust so dramatically, you actually make your market low at 28,790. Down thrust outside the trading range. Reaction is to go back up, sign of strength, and then you start to roll over. Wyckoff calls this a spring springboard, okay? Strong sign of strength up. Key TA principle, you have your low, you have your higher low. You're able to hold your higher low. Very important to note, what are you using as support? Your 233. You will see this over and over again when price descends to make the next leg. It holds the 233 as key support, specifically here in Bitcoin. So from our LPS, our last point of support, you go up, and of course you have what's called a mini cough in my room, and you form your next trading range. And again, holding that higher low structure, this is called a backup. This is nothing other than reaccumulation in Wyckoff for your next sign of strength, okay? So your next sign of strength, and this leads you up to your rise to the distribution box for your all-time high. Let's go ahead and mark this in. I know I'm going fast, guys, but we do teach this in the room. If you are interested in Wyckoff, advanced Fibonacci trading, come check out the room. The link is in the Discord. The link is in the video description to our Discord. So we have our change of behavior candle right here. Here's your trading range. Now, we had our up thrust, right? We have our down thrust here. We test the bottom, and then we get our sign of strength after that, leading us all the way up to our triple up thrust, past the 618, which made it difficult to catch the top, past the 618, the golden pocket, and of course we didn't hold it here. You need to hold this. This would have been key for the next accumulation phase. Hold this as an LPS, right? So you could come back up in that cup pattern and get your next sign of strength up. That's what we did not do. Understanding the steps is what's so important. We lost it here. We try to have our last test of supply, trying to hold these candles here as support. Hammer gets thrown down, volatility, boom, you descend. And where is that now? That leaves you with your next massive selling climax candle. You see how strong and how long that candle is? That's actually very, very big. That was a big dump, and it was a big demand wick buy back up, okay? Let's go ahead and box this in really quickly. And so we have our selling climax candle, and then we have our automatic reaction from that selling climax. You see that to your change of behavior, not coincidentally just below the 144. You got above your 233 briefly, and once again you get your volatility chop, which is what happens in sideways markets, okay? Very dramatic volatility swing here. I actually boxed this in tighter when I was trading in this range because, as you can see, this was clearly a support line. Now we came up once again, up thrust outside the trading range, and we fell apart. This became another area we needed to hold a support, and we lost it. And of course we just descended and descended again. This brings us to where we are now, and now we can use Fibonacci as well. I showed this in the collaboration video. A lot of people were asking questions about it, if I could do it again a little bit slower. So let me zoom in, guys. Very important to note, look what you're hitting your head on. That previous Wyckoff base, you see that? Now that's also going to be an important number in Fibonacci, okay? So if we go to our swing low here, guys, January 24th, swing low, trend-based fib. Click there, go to your swing high, February 10th, go back down to your swing low. Look at your 618. I removed the 382 and the 0.5 so you could see this clear. The 618 is right where the candle is, which happens to be the exact same line that the previous Wyckoff base was at. You see that? So that's where you're hitting your head right now. Now again, what Bitcoin's trying to do, and I'll show you this with the trend-based fib, let's get the support line. We're going to go up to this swing high here on March 2nd, down to the swing low, again, trend-based fib, guys, up to the swing high, 618 again. You have a 618 box, okay? So this is essentially your Wyckoff trading range in Fibonacci. 618 box, daily time frame. So these are big candles. You could zoom into the 1 hour, 4 hour, however you like to trade. But what you're trying to do, once again, is you have your low. You have your lower low here, right? So you have your lower low, your higher low, your higher lows, and you're trying to hold this as an LPS for your higher lows to come up and do what? Make your cup pattern, come up and test your 144 and 233. And the idea here would be you get above it. Yes, you can retrace, but you want to be able to hold this as it comes along. You want to be able to stay above it and use it as support. This could become your backup where you'll make another cup type pattern and get strong bullish candles for your next leg up, okay? This sign of strength could be much higher, but the key thing is you have to flip these moving averages because, as we said, going back since December 4th, You have not done so, and every time you get rejected, you get dumps from it, okay? Very important to note. Now, if we look at our volatility, where we are now with the volatility, we are starting to bottle up. I can show you this with the reverse engineered RSI that functions like Bollinger Bands. I call it the caterpillar. If you zoom out, you see how wide it is here? And it's tightening up. So you're going to have a move. That move can be up. It could be a very brief move up to test that. If we get rejected, we're going to fall. And my sense of it is because of how tight this is getting, we're going to be falling pretty hard to support. You could be falling down to 37,490 here at the 618. 34,333 at the 1 fib, but you would definitely be falling down. And if you lose that, your 1618 is going to bring you back down into the 20s at 29,225. So very important to try to flip those EMAs, okay? Now, if we flip through this and we look at Ethereum, I showed this as well. Ethereum's doing the same exact thing, guys. 618 box. You see this? You have the 618 box here. Oh, one thing I left off. I got to draw my Gartley pattern. People were asking me questions about what was that pattern. A lot of people know exactly how we trade with these patterns. I know we got a lot of new subs, so let me go ahead and draw this for you. So Fibonacci patterns, guys, they're 5-point patterns. There's harmonic patterns, X5 patterns, but these are 5-point patterns. And so what I'm doing is I'm taking a swing high. These form in W and M's, okay? W patterns are bearish. X to A to B, down to C, up to D. Now this is a Gartley. So the Gartley is going to, let me turn my magnet off. The Gartley is going to come to 786 here at the ratio right on the dot. So what this does is if price travels X to A to B to C, making this W pattern at point D, which happens to line up pretty closely if the moving average is, you would see retracement. And again, how well you hold here at support is crucial because this could be a pattern that drops you down significantly. This is a daily pattern. Daily time frame has a lot of power. So this could be an early activation here and you're trying to hold support, but chances are you're going to come up and you're going to have resistance. You may have to test this a couple of times to try to break through it. We'll see. You want to see big bullish volume candles, institutional candles, okay? Another way to know a move is coming in, you can tell it in the volume, okay? When the institutions check in, they use big candles. And what we have now is volume decline left to right. That's part of volatility descending, okay? Volatility is descending. It's like a spring. And when you compress that spring, at some point it will pop out of your hands. It's the same thing with volume. Volume is tightening right now in Bitcoin on the daily time frame. You can see the volume descending. So there is a move coming in, and what you want to have is these big bullish candles. You get the big bullish candles, you can potentially flip those EMAs and hold them as support, okay? So Ethereum's doing the same thing, and we also have a bat pattern that formed here, and you're getting some dissension from the bat. This is a bearish pattern as well. And if we flip to the Russell, the Russell is doing the exact same thing Bitcoin is doing, and I showed that comparison in the collaboration video, but you have your low. You have your higher low, and you're trying to hold your higher low outside the Wyckoff trading range. You see this? Your green lines. You want to hold this higher low using, in this case, the 55 as support, because if you can make your cup type pattern here, get your accumulation, you're going to have some volatility in here, you want to be able to surge up. We happen to have a bearish 5-0 pattern here, and you have, just like Bitcoin, your 144 and 233. They are all in the same space, okay? The hyperspec tech stocks in the Russell, in the NASDAQ are all doing the same exact thing, trying to form an LPS to move up and test the 144 and 233. And of course, here's that comparison. I put this in a window so you could see this more closely. Keep in mind the Russell 2000 and Bitcoin both made their all-time highs 48 hours, within 48 hours of each other. Look at this quadrant, how closely they are tracking together. Super close, to the point where you can just pull this down and put it on top of it. Now, granted, different volatility of an index versus Bitcoin, but you can see the path is nearly identical. And again, they're all-time highs, guys. This is the Russell and the colored candles, Bitcoin in the white. Russell made its all-time high first within 48 hours. Bitcoin makes its all-time high. They both track super closely together, as you can see, making the same pumps and dumps, okay? And again, the 144, 233 are above you. And once again, you see this in the NASDAQ, okay? The other tech-heavy stock index. Look at this. You have your low. You're trying to form your higher low up here. Same exact thing, except this time you're under the 55, but you want to try to keep your trading range, and your 233 is right here, okay? So you may descend some here, this 45 Gann angle line. You could end up using this as a cup support base. If the candles come down and try to hug this line and come back up, you're going to see them try to test this 233. All these indexes need to flip their 233 on the daily time frame to go back to have the potential to be bullish, get a sign of strength, be able to roll over and move up, okay? And that's where we're at in the marketplace. Guys, if you like this type of trading, definitely check out our Discord. The link is in the video description. Check out our sponsor, BitGet, fantastic place to trade anonymously. Very important, anonymously. Every country in the world can trade there. USDC, USDT is a fantastic, slick API. Okay, you'll really enjoy trading there. And of course, we're on Twitter as well. All the links in the video description. And definitely, if you go over to Craig, say hi from Market Makers. And we really appreciate that collaboration. We'll be doing another one for you guys soon. Everybody seemed to really enjoy it. So have a good night, everybody. Talk to you tomorrow.